Hi and welcome to the Market Alert for Wednesday the 28th of July 2021. There's a lot to get through today, so it will be fast paced. So let's kick off with the headline: stocks, dollar and bond yields tumble. Notice this bit here: dollar tumbles after Beijing bloodbath and mask mandate miasma. China's carnage spread to US markets amid rumours of an Asia-focused fund in trouble. That's what set the Dow moving to the downside yesterday. And again, this is the same, more or less the same news, again with this masking mandate, and this is indoors as well. So the COVID nonsense is still not over yet as well. This is the Nasdaq's biggest daily drop since early May. And doesn't matter though, buy the dip. Insanity, recovery from sudden market drops is the fastest on record. In a centrally planned market where the Fed has effectively outlawed drawdowns, corrections, and heaven forbid, a bear market, the only trading strategy is being the first to buy the dip. And I've seen this before, any dip, and that's what we've seen over the last few weeks, although there's a bit of weakness around at the moment. Let's have a look at the news for today. Well, it's the big one today, isn't it? It's the FOMC statement and press conference out at 7 p.m. I said the market would be quiet yesterday, but that was until we had the China problem issue there that we're seeing that hit the market yesterday morning in the futures and then continued on through the main morning until they realised that it was just a rumour. And then we saw the buy the dip and they brought the market back. That seems to be the pattern. So normally, not that anything's normal anymore, the market would be fairly quiet as it awaits the FOMC, particularly in the afternoon. So we could get a bit of activity this morning, but certainly this afternoon the market in the Dow is going to be waiting for Powell to speak. There's going to be no change on interest rates, but there has been hints of him announcing some sort of tapering, but we'll just have to wait and see. I'll come back to the metals news in just a moment. Let's have a look at the Dow. Is it over here then? It'll be here somewhere. Dow daily. You can see yesterday the market putting in a bit more selling there. You can see the volume is huge for yesterday, and there's some weakness overnight as well. So what I'd be inclined to do is just to draw in these fibs. It's highly unlikely the market's going to get anywhere near here because Powell is speaking later today, and also we've got the 20 bar moving average in the way as well. Also, if you wanted to see how far this could move down in connection to this low that's been left behind here, then just click twice at the bottom of the bar after selecting the fib retracement tool, and there you can see we're currently at 62% of a retracement back from this high coming back to these levels here. So if you want, you can always use those smaller moves there because you've got this low that's left behind here, and it's actually at the 20 bar moving average as well. Overnight prices have been making their way back down to the 200 MA as well. And also, if we just go back to the daily chart, one observation here: if you take yesterday's price bar and you're wondering where you are within this bar, have a look at the 30-minute chart, and yet you will see yesterday's low. So from here up to here, we are now sitting around the 78 area, which actually ties in, well, 62.78 ties in with the 200 MA as well. Bit of an increase in volume there as well, as the market's found a bit of a bounce. So again, you can see instantly where you are with regards to the previous day's trading range as well, which is always very useful because in any rising market, you will see, if we just have a look at these bars here, the market barely retraces as it moves to the upside, and then once it establishes a downtrend, the same thing as well, makes those lower highs. But it's interesting to see once you start to break the previous bar's range using fibs just on that one bar, how it gives you a very good indication of the market losing its strength. In the German DAX, a lot weaker, as can be seen here. We only got back to 89. We didn't get back to the all-time highs on Monday. Tuesday the markets moving lower initially, then coming back, which we'll look at in more detail shortly. That based on the China rumour. And then prices just sort of sideways inside the range, but still below the 20 and the 5-bar moving average there. These are the downside fibs for the DAX at the moment. And again, if you go into the 30-minute, you can just pick up from yesterday's low to the high overnight, and you will see the market trading at the 62% retracement there, and again a pickup in the volume in the last 30 minutes, which you'd expect. So again, you could leave these on the chart as areas showing you where there is support, and of course you can also do the upside as well if the market turns around and moves back up. So from this high to this low, if it holds, would give you the resistance areas back to the upside. You've got the DP, previous day's close, I think that is. It is, previous day's close. And then you've got the 200 MA there, and then the high, which is also 89% of that high. So you can expect some resistance there. In the 2-minute chart overnight, let's have a look. Where are we? There we go. That's where it kicks off. So we gapped higher. You see where the market's been brought back here. Sideways, just sitting on that 15,500 level. Cluster of volume there as prices are starting to hold, and also again you can see a fib retracement there as the market's attempting to come back to the DP and the close here. Right, let's get on with the metals markets. What a fantastic and fascinating day it was yesterday. Let's start off with this. Now, for those that are saying, well, there's no manipulation in silver, just feast your eyes upon this. Now, this happens and has happened for many days, and this chart shows it more clearly than looking in Omni, because it's got the gold price in red there, so you can see how the gold price was unaffected. You've also got, I think that's platinum for the blue line, but just look at this. I mean, if you ever wanted proof of manipulation, you can pick this chart up from Kitco Silver. Just type that into Google and it will give you the actual link. Just to watch this every day for the last goodness knows how many weeks we've seen them do this to the silver price. Now, if you want to know about the manipulation, and I mean, this is... there's no, it's not a conspiracy theory, all of that BS that people keep lobbing out. If you have a look at this video, ignore this. I'd hate this sort of hyperbole, $600 silver alert. Forget that bit. But the details in this video, where it shows that judges were told not to make sure in trials that the complainant never actually won the case, and it's actually official documentation that's in this video showing this. So if you're interested and fascinated by this, like so many are, what's going on, then do have a look, because there's some juicy bits in this. I'm not a big fan of some of the stuff that Weir actually does. Like I say, especially stuff like this, which is clickbait, but the details in here are absolutely fascinating and well worth a watch if you want to know more about the details of what's actually going on there. But just a quick look. I mean, if you can't see it already, it's just blatant, isn't it, what is going on? I mean, here's the example yesterday. The dollar went down and so did silver. Well, that doesn't happen in the normal relationship of these two commodities and currency. Are normally the opposite. So now the fact that the dollar is going up, that will give the opportunity to slam it down once more today. So let's have a look what they did yesterday. They managed to take it all the way down to the 24.64. They took it through this all the way down to 24.50. I still think it's going lower myself. They're going to use this to their advantage now and move the market down to $24 because they can, and we've seen them do this for the last several weeks, where they've continued to do the opposite of what gold has been doing, where gold has been moving to the upside. I just find the daily chart, bit of a pullback, no great deal, but yesterday looked tiny move in gold moving back to the upside, and silver will start reversing before long, I suspect, because like I say, they can do. There's yesterday's manipulated drop to the downside. There's the climatic volume there at the 24 level, and there you see them buying back or taking profits, the shorts getting out and the market being brought back. But don't expect this to hold today. Already back to the DP, and we can see a spike in the volume there, which for me would be bearish. So I'm expecting this to continue to the downside. But as the metals trader Lynette Zhang said, thank the manipulators for moving the price down to these low levels, because they won't be there forever. That's for certain, because as I've said before, once they go long, it will never go short again, and it's just a matter of time of waiting till they get the nod from the Fed. Right, okay, you can go long now. You don't have to manipulate the price lower anymore. Let's just go for it. I mean, you've got the inflation situation that's brewing under the surface. It's just absolute nonsense, but fascinating to watch. It can be incredibly frustrating as well. But I just see these as buying opportunities, and I do think we're going to get down towards that 24 level. And I wouldn't be surprised if they're given the opportunity, they would actually take that lower as well. But we'll have to wait and see if that is the case. If not, if they do turn this around and we start to see prices moving to the upside, then I'll just wait for pullbacks to buy back in. But at the moment, it's like catching a falling knife, because the market keeps putting in these down days, as was seen during yesterday. We had 2 last week, and 1 yesterday, and 1 here. And then we had this when it broke the 2750, traded sideways for a moment and then continued. And I think we're going to see that certainly through August to September delivery. Okay, let's have a look at yesterday's trading session. This also very interesting, as the market moved sharply lower on rumours, as we saw in the headlines of an Asian fund in China having issues, and the market then just continued when the cash opened straight through the low. They did try and bring it back in the first 2 minutes, but then it was just hit by further selling. Prices, again, if you use the 5-bar moving average, remaining below, irrespective of any support that came into the market. Prices were pushed all the way down to the S3 level, which you will see not a single bar closing back above the 5-bar moving average until we got to here, where we saw, but then a straight reversal back through. And I'm looking at the daily chart there just to get an idea of where this is likely to stop. And there we see the S3, where 90% of the time the market will stop in this area. You can see prices coming back, and then you're getting the retracement area support as traders then buy back in, and they bring the market to the upside. We have a potential buy signal which is filled, and then we see prices moving back to the upside through the first 89%, which is at the BRN there. If I can just get my fingers on the keyboard in the right place there, and then moving through here, I just redrew the fibs higher just to see where this was going to run out of steam. So at this point, there's 51 points on the table, and the market now. What I was saying earlier about if you look at all of these higher lows, you can see the market is opening, then moving higher, opening, moving higher. And then on this one, if you were to divide this price bar, let me just clear the other arrows. If you were to divide this price bar into a Fibonacci retracement, you can see that it stops at near enough 89% of the range of the previous bar. And once it starts to do this, the market starts to establish the end of the current move, and either trade sideways or reverse depending on the price action. So there we can see prices coming back and closing below the 5-bar moving average, profits taken off the table, and then prices trading sideways and struggling with that 5-bar. But again, just that simple technique of looking at, as the market makes these rising lows and then stops, how far back does it come back to the previous bar? is a good indication of the weakness, because obviously it's not very weak if the market is opening, moving higher, opening, moving higher, opening, moving higher, etc. And then you're seeing the opposite as the prices come back. Don't want to overcomplicate it. We then get a potential sell, which is filled. The market then moves lower. We see a bit of support, and again notice this bar here coming back against this bar but not taking out the bar's previous high, still below the 5-bar moving average, and then finding support at the 78, closing back above the 5-bar. Thank you for the profits, and then we see the market retrace there. I had a delivery at this point, so I wasn't at the desk, which is why you won't see this one redrawn with the actual trade markup. Prices trading sideways there as we ended the morning session. So let's fast forward through up and down, and then we got into the afternoon. We had the consumer news in the afternoon, so the market opening trading sideways to lower. It was soon bought back here, which you can see, massive return again, taking out the previous bar's high, and then prices just trading sideways as it waited for the news. There was a potential buy signal and a sell signal that was filled, but you'll see this removed as we got to the news, because we know that high impact news items are going to affect, and they certainly did. And then the news was released. It was positive. It was up I think 1.29 or 129, I can't remember, but it was really positive. And then the market responded accordingly by doing absolutely nothing and just got stuck in a range. We then had a potential buy signal. We've got all of this resistance to the left here, and it's important to note that at this point you can see that the volume is greater than the previous bar, but prices failed to move higher. They couldn't take out the resistance to the left. You can also see that this bar here is 89% of this bar, and this bar here is 89% of this bar as far as the range is concerned. So again, market struggling and failing to move higher, and as it headed back towards the 5-bar moving average, I got out of the trade as it turned red, taking a 10-point loss, and the market just traded sideways then and did absolutely nothing. You can see it was going to be quiet again because of today's news from the Fed, also at the back of the traders' minds, and then the market managing to come back there. And had you stayed with that trade, you can see there that we ended up hitting the scalp. But for me, it'd been a good day, and already drawing to a close. Okay, that will do it for this one. If there is anything else to report, I will let you know. But let's see what Powell does this evening, as we have the FOMC meeting minutes released at 7 p.m. That's it. As ever, thanks for watching. See you in the next.